because this is a huge deal. Like, even if you're not going to waive your mortgage contingency, when Mike calls you up or calls up the selling agent and says, hey, we've already gone through underwriting. This is, if you haven't done this, I'm going to tell you right now, you're not going to get a home.
Yeah.
Period. I mean, unless no one wants it and there's dead bodies hanging around.
Right.
What's the 5 Ps? Do you remember it?
Proper preparation prevents poor performance.
There you go. It doesn't matter how much money we get. If we don't close, it's no money, right? So no close is no money. I'm everything that I am because of my dad's death. And I wouldn't be as successful without his death.
Hey, welcome to the Jason Theory. Today we're going to talk about some really cool stuff that's going to help you secure your property. What we're going to get into with my next guest is the best way to beat other offers, how you can prep the mortgage side so that you can beat other offers. And then we're going to get into some investment property, new products. And then we'll just talk about some mindset stuff and how he's built his business and how he keeps himself going. And, you know, with in our job, not having someone on your neck telling you what to do, you kind of have to self-motivate. So we'll talk about that first, but we'll talk about that too. But I first want to really get into our speaker, who's speaking, and then get into how do you win in one of the most difficult markets. And that's the Midwest market in 2025, which is different than every other market. The Midwest is up 4 times the national average. We have severe supply issues, and we're going to talk about how you can win that place that you love. So, Mike, give us a little bit background on you, and let's get into it.
Yeah, thanks. I'm finally on the Jason Theory.
You're
I'm excited.
Here. We're here.
Love this podcast. It's a great podcast, and gosh, it's nice to be here. My name is Mike Black, and I've been a lender for 23 years now.
Long time.
So been here a long time. I've been anywhere from the big bank environment, so I kind of know how that operation works and what that looks like for my clients when they're, you know, considering going down that path for financing. And then, you know, the mortgage banker side now, where we have an array of options to offer people and solutions and customized mortgages and things of that nature. But I've really built my business in general just on high touch service with clients. And what I mean by that, and I know it's kind of going to lead into what you want to talk about today, is just I took the approach back in like 2012 to really just spend more time up front with clients versus just push button, shoot rocket, get mortgage.
Yeah,
doesn't work like that, right? So we are just very dialed in with that upfront process, because what we find is, by going through that and, getting people, I like to say, comfortable with the uncomfortable, it makes your job easier.
Okay.
So
I like that. Getting comfortable with the uncomfortable. So just not telling people what they want to hear, but what they need to know.
Totally. I mean, there's really nothing comfortable about buying a house today in 2025, would you say?
Yeah, no, it's not. Being upfront in the process is probably the only way that you actually can get a house, is just knowing what you're actually starting, what your journey is, and what you're going to need to do to get it. And that's not saying that it's an impossible dream. It is hard. Don't get me wrong. But anything that's hard, it's worth its weight in gold. So you kind of want to go down that route.
Totally.
Let's talk about the fact that most of my sales right now are done. And I talked about this actually a couple of weeks on the podcast when I did it by myself, is having a cash offer with mortgage allowed, which means that you could be cash. Normally you're not, because there is something that says straight cash, but you're telling a seller, hey, I know I can get the loan. I don't need a mortgage contingency, which means, hey, as a seller, the minute we're out of AI and I get the earnest money is at risk. That's called being hard. The earnest money is at risk, and the seller can feel comfortable that they know that you're so qualified and you're so comfortable in getting the loan that you don't need another out if you can't get it. Talk about that, and what steps. This is scary, right? Because someone's going to have 5%, could have 50,000, 60,000, 30,000. They could have that money at risk. What do you tell people how to prepare for that, and what steps do they need to do? Like if someone said to you, okay, Mike, I want to do that, but I don't want to lose my money. What are the steps?
I mean, it all starts at the buyer consultation that we offer.
From the start.
From the very start. So, at the very beginning, when I meet a client, it's really just information gathering. But once we know what they look like and we get all their documentation pulled together, and nowadays, I mean, I used to only ask for proof of funds to show down payment. That was probably 8 years ago. Nowadays, I want to see the big picture. I want to see like what, they have in 401k. I want to see what they have in their investments. And the reason being is that when you get into what you're talking about, cash with the option to finance and waiving mortgage contingencies, which is pretty much what you got to do to win.
You have
on
to.
What you're buying, right?
Yeah.
I want to give them confidence that they can do this without stepping on a landmine. And what we do is we do a deep dive. I go through an entire interview process with the client. I want to make sure all the I's are dotted and the T's are crossed. And I want to make sure that, as we go along, the process of making an offer in today's market and what that looks like, I want to really touch on, here's some tactics and strategies that we are going to have to do. And Jason's going to talk to you about this as well when you get into his consultation if he hasn't already. But these are some things that you're going to have to do to win the deal. And I want you to have the confidence behind it because we've already sent you through underwriting and we've got a loan for you.
Yeah. Can you explain that because this is a huge deal. Like even if you're not going to waive your mortgage contingency, when Mike calls you up or calls up the selling agent and says, hey, we've already gone through underwriting. This is, if you haven't done this, I'm going to tell you right now, you're not going to get a home.
Yeah.
Period. I mean, unless no one wants it and there's dead bodies hanging around.
Right.
So if you want a home that doesn't have dead bodies, explain what going through underwriting is because people don't understand that.
True. So what that entails is we're going to do a deep dive on your finances. We're going to get your last 2 years, your W-2s if you're W-2'd. We're going to look at your tax returns for the last 2 years. We're going to get your bank statements, your financial statements pulled together. The nice part about our process right now is that we're not doing hard credit pulls, which was, a reluctancy that people have, especially if they're not sure if they're ready to do this just yet. We just do a soft pull on your credit right now.
So what's the difference between a hard pull and a soft pull?
The hard pull just goes down as a hard inquiry on your credit report. Soft pull gives me the same credit report in hand. And so some lenders out there will do a hard pull. I don't believe in it up front because your credit's good for 90 days typically. And so we don't want to have to keep doing hard pulls during the process because it's going to drop your scores.
Okay.
Right. So we'd prefer to do a soft pull up front. For underwriting purposes, it gives us the same report that you would get on a hard pull.
What do you get on a hard pull that you don't get on a soft?
You might not see some like judgments and some things along that if there's some really bad derogatory things, but your score would reflect that.
Yeah, so it's like, all right, there's a bad score here. There's something. We don't know what it is, but we've got enough.
Correct.
Okay.
Correct. But we're going to see if you got 760 plus credit score, we're not
no,
worried about judgments on your credit report, right? So we'll do a deep dive on that. We'll take everything. We'll get it into a licensed underwriter to underwrite your loan. And basically what they're doing is they're giving you an approval saying that subject to there's not any issues with the property, there's no issues with the condo association, you don't have any insurance with issues with title, you've got a loan and you're solid and we're going to fund. So once we get through all that and we know what you look like and we know that you're approved, that's where we kind of do the deep dive on saying, what type of property are you buying? Are you in a high-rise condo? That looks a little bit different in waiving things because you don't know if there's any problems on the high-rise building. Are you in a low-rise condo?
But you do have your attorney review period where you have time to review those docs.
Absolutely.
So once, I just want to just tell that to people because in the back of my head, I'm like, well, what happens if title is clouded or this or this? You're protected on that. If something's wrong with the property, that comes up in the title search, you're fine. When decks and bylaws and budgets and minutes come out in Illinois, it doesn't matter how long the attorney review period is. If the attorney review period is closed and you don't have all the docs, it's 3 business days from the last document you get. So even though you've pulled your mortgage contingency and you have a full underwriting, if there's an issue with the building, you still get your money back. You just have 3 days to look at all that stuff over. And that's going to be on the 22.1. So that's going to be a disclosure. It says, hey, we have a special assessment. We have this. You are fully protected on that building until you get every single document. I just want people to understand that.
Yeah, and that's on 5 units and up.
Yeah.
So if you're in 5 units and up, that's where we have to, kind of do our due diligence on the con. Now, a lot of times we got a whole list of condos, like I mean, it's hundreds of condo.
Because a condo could be approved by you guys already.
Totally.
Like you did a loan there a week ago or something.
Yeah, if it's on the approved list that we have already, that gives you even more confidence that we're not going to run into any issues as far as underwriting is concerned during the process. So it's one of those like symbiotic relationships with you and myself and the agent, where we got to do a lot of talking up front. And sometimes, if we're waiving mortgage contingency, which just so everyone knows what that means, it just means that you're waiving your financing contingency to get out of the deal and get your earnest money back. That's what that means.
Yep.
So if we're doing that and we know we've got a 5-unit up condo building here in the city that needs some work done on it, that's one of the first things that we're going to do during attorney review is we're going to get the condo question out. We're going to make sure we, get the budget, get all the things that we need to approve the building. And if something comes up where there's structural issues or whatever that may be on that, you can get out of it.
Yeah. So waiving the mortgage contingency, the only thing you're really waiving is your ability to say, hey, I can't, myself personally can't get financing. But what Mike's saying is, if you do it the right way, like he's saying, you want to run through underwriting. So by the time you put that offer in, when I get offers, it'll say, you have ran through underwriting. These are the only conditions. And then I look at the conditions and it's stuff that's on the building side, on the title side. So you're like, okay, I know we're good here. This offer is good as gold. They've already gone through everything. And I will tell my seller, hey, they just need an appraisal and they just need this and this. And the appraisal doesn't really matter either now because you've waived that mortgage contingency.
Yeah, and so you got to be a little careful with clients. If the client's putting down 3% or 5%, you got to be a little careful with that
because you could get stung on the appraisal.
Yeah, and so let's talk about that as a tactic, right?
Yeah.
One of the things that I've done since really the pandemic started was I started getting all their assets pulled together, and the reason that I do that is so that I can verify that they have enough to put 20% down. Now that doesn't mean that's what they're going to put down, but I've verified that they've had enough to do that. And so that's a tactic we've used a lot to win deals where we've showed a bigger down payment because if you're a listing agent and you get an offer with 5% down versus an offer with 25% down, your seller's probably going to lean more towards that 25% down number. Right?
Yeah, and it's so interesting. Like I've seen sometimes where people are like, I'll get offers and I'll be around and one's got 5% and one's got 10%, or the earnest money is like $5,000, but they're putting 20% down. And I'm like, all that stuff matters. Like we're looking at that and people are like, well, why does it matter? And I'm like, because we need to know that if something goes wrong, that you have the ability to buffer it. Yeah.
I mean, I've actually had listing agents call me that I knew on the other side of the deal where my buyers came through and my pre-approval letter said 20% down, but the contract was written with 5% down. And I've actually had listing agents call me like, hey, is there a disconnect here? And I'm like, you know what? I think that was a mistake by the agent. We'll get that fixed. But my seller's not going to accept this with 5% down.
No.
Yeah. So that's legitimately has happened to me before. And
people get mad at me when I say that. I'm like, your terms are not great.
Well, and the thing that people need to understand, and this goes back to the whole like buyer consultation and the things that we talk about during that, is that just because we put 25% or 20% down on the contract, I don't know how many times you look at your closing disclosures when you go to closing, but a lot of times people switch that back. And the reality of it is we are telling the sellers that we have the ability to put 20%.
Yeah, you don't have to.
You don't have to, but we go back after you go under contract and we can make the adjustments. We can do 10% down or 5% down. As long as your loan goes through and you get to the closing table, no one cares at that point when you're at the closing table. But what people have to understand is that the seller doesn't see your financing all the way through the entire process. All they see is the bottom line at closing when they get there and they see that they've got their money.
Yeah.
Right. So that's a tactic that we use a lot. I could tell you a number of success stories around it, especially when property values were jumping up so much during the pandemic, where we showed 25% down and my client was a first-time home buyer and ended up putting 3% down. And then a year later, I went and refinanced them and they had 25% equity in their property at that point.
Yeah.
So that's just, but again, the planning phase is the upfront heavy lifting. It's not fun. You have to get all your documents pulled together, and it's not a lot nowadays, but it's more if you're self-employed, but the planning phase is the magic behind the search. Yeah.
It's interesting when I'll tell someone, hey, call Mike, you get this done, get this done, get this done. And then they're like, they'll be like, yeah. And then we go see something on Sunday or on Saturday and like, oh, we love it. I'm like, all right, where was your approval? And they're like, oh, I'm like, I literally tell them, I go, I'm not writing this. There's nothing, you have nothing that says that you can buy it.
Yeah.
I mean, do you want to get a letter from your mom? It says I'm good for it.
Yeah.
I mean, like you have to take care of that in the beginning. And I think if you do all those stuff that you're talking about, and then you say to the person, hey, listen, let's get to a point where you're so confident that you can get the loan that if need be, we can drop the mortgage contingency.
Yeah. And I mean, you can probably talk on that too, but I mean, I think if you're competing against cash out there, that dropping the mortgage contingency is about the only way to do it.
I haven't done a deal where there's been a mortgage contingency in a long time, even on the buy side.
Yeah.
Like but I, like you said, at that buyer consultation, I said, listen, this is what you're going to, they're like, everyone's like, oh my God, it's so scary out there. I'm like, it is. I go, but these are the steps that you can take where you have the greatest chance of getting something. And I tell people, I go, I've bought probably a lot of properties, but let's just say the properties that I live in the last 7 properties, I've never had a mortgage contingency. I just say to people, I go, I either know I can get the loan or I can't get the loan. And if I can't get the loan, I'm not putting an offer in.
Yeah. I mean, and the other side of it too is like, I think when they know it from me, and they know what their financial picture looks like, and then they hear it from you, when those two things come together, they know that this is what they're going to have to do to compete. And I mean, I've been on multiple offers this year where, we've had 10 to, I think the biggest one I was on was out in Mount Prospect. It was like 35 offers.
Oh my God. How do you go through those as an agent?
I mean, I wouldn't want to go through those as an agent. So I think that might be where some of the agents people are like, why didn't they let the open house finish up? And they just took an offer. It's probably because they don't want to go through 35
offers.
Right. But, it's again, like we've beat cash offers. It's not cash offers. People got to understand is that they can still get out of the contract. Just because someone's making a cash offer does not mean that, you can't get out of that. Just because they're paying cash does not mean you still can't go through attorney review and you don't like
kill the deal.
Kill the deal.
Yeah.
So I think, from what we've experienced this year, I think just getting the other side comfortable with who they're working with. I know you're going to touch on this, but I call I want my clients to tell me every time an offer is going out, because I want that listing agent to know that I'm a local lender. I know what I'm doing. I've been doing this for a long time, and that me and Jason have a great team set up here to really execute at a high level. The clients have been through underwriting. It would blow your mind, because you don't probably get a lot of calls on these, but like I was just in one the other day with 20 offers out in Highland Park. I was the only one that called. It's crazy.
That I think is a huge difference between the different companies. Like people always say to me, listen, the 10-year's the 10-year, right? The rate's the rate. It's everything else. It's the service, right? Everything else is, listen, you can go to someone else and they're going to sell your house, or they may help you buy a house cheaper than me. They're just not going to give you the service that I have. So if you're okay with that, I'm okay with it too. Like I always say to people, listen, I always say to people, not everybody needs to drive a Ferrari.
I like that.
A Yugo and a Ferrari get you to the same place.
Yeah.
Ferrari just gets there a little more comfortable.
Yeah.
And probably faster. So like you don't have to do that, right? But like what you're saying is and I agree with you, over the last 3 or 4 years, the phone calls, not all the time, but I do get calls from the bankers and from the mortgage brokers. And I'm telling you, it is a huge difference. It makes a difference. And you're not going to get that call. You're not going to get that call from a large bank where the person that's doing your loan is housed in San Francisco, Texas, or Florida, or New York.
No, I mean, there's a definite difference. I mean, and if we want to touch on that, I mean, you got online lenders, which is probably going to be your cheapest channel to go through, and not always. I mean, if you go to Rocket's website today, you'll see on there that there's a lot of points that you pay for those rates that they're advertising. Then you got your banks, and they're 9 to 5. They're monitored on their phones. Like it's a different feel. They sit in the banking center all day. And then you got us, we're consultants. And so I'm like you, I'm not like, I'm competitive, but I'm not cheap.
Yeah.
And that's the way I like to put it, is like, you know, we're not going to be like the absolute cheapest on the block, and we're not going to be the highest. We're going to be competitive. We're going to get you a competitive deal, but we're also going to be there on Saturdays and Sundays when you need us. And that's primarily when I'm on the phones with clients. I'm working Saturdays and Sundays. I'm calling listing agents. I hate losing, man. I hate losing. So like, you know, when we get into that battle, and that's what I prep people for in that buyer consultation, you are getting ready to get into a battle, but you've got an army behind you that's going to help you like really take over.
That big banker, they're not battling. They're
not around on Saturday or Sunday.
Well, they're just, no matter what happens, they're getting paid. They're just clicking. They're what do you call it? That timestamp.
Well, yeah,
they're punching their clock.
Not only that, but I mean, you know, you have to be prepared if you go down that path to lose a lot more than you win, and you also have to be prepared to babysit, because you're going to babysit your loan. And again, if you have the time to do it and you have the time to babysit, what I like to tell people is you should partner with someone like myself when you're going out there and going to battle and rolling your sleeves up and trying to win deals. Look, if you want to, like a year down the road, refinance with your bank, do it. That's fine. You got all the time in the world. You're not under contract. You don't have all the pressures of waiving contingencies. You've got a lot more time on your hands to maybe go to like a Rocket Mortgage to do your refinance. But you need to use like extreme professionals that are going to make a good impression on you and your team that you're using for the transaction when you're out there trying to win purchasers right now.
I always ask, like, we'll be sitting down at the buyer consultation, and I'll be like, okay, who's your, like, how you're going to get the money? And the minute they tell me, oh, you know, I'm going to go, like, the first thing, if someone tells me a credit union, I'm like, okay. So when that falls through, who's the second person? so when we're 5 days away from the mortgage contingency and you losing the house, who's the second person you're going to? Then they're like, well, what do you mean? Like, listen, I go, and that's what I say to them. I go, listen, these banks don't have a vested interest in you. They just don't. They're not relationship based, right? So however they perform with you, that's it.
Well, and even if they are relationship based, I'll tell you that I went with my bank one time, and it was on a prop. I have a very good relationship with them, and they just didn't like my property. So I didn't know this, but I had to babysit. I'm in the business all the way to the finish line, and on the finish line, I got denied.
They don't want to do the deal.
And it was brand new. It was new construction townhomes. It's not like there was anything like crazy going on here. It was just they didn't like the deal, and it put me in a really bad spot. So I think what people don't realize is when that happens, and what you just said, you got 5 days before you're supposed to close and things blow up. Nowadays, sellers don't play around. You're getting penalties. You got per day charges that you incur. In this market, I don't want to give the sellers any reason to back out, because a lot of times there's backup offers behind your offer.
Yeah, people think that we had a inspection yesterday, and I'm talking to the agent, and I know there's backup offers, right? So my language is very specific. Like, I'm saying things in the way that I need to say them, because I know if I say the wrong thing, I'm just going to get a cancellation letter. And I don't think buyers realize that. Like, the seller can cancel on you the same way the buyer can. It's right in the contract. The minute that attorney review is open, if you cannot come to agreement, either side can cancel. And you can just sit there and wait for the days to expire and say, I'm canceling. But most lawyers know that you're just going to sit there. So what they do is just like, let's just do this now, and we're just canceling on you and taking another offer.
Yeah.
And when you go to contract, people are still doing showings. It's AI. There's no inventory. I go to contract on something on Thursday. I'm doing showings still all the way to Friday, Saturday, Sunday, Monday, and we're taking backups.
Yeah.
Like, everyone needs to be on point.
I agree. And one of the other things that we talked about a little bit earlier too is that when you do have that 20% down, 25% down buyer, and they're waiving everything, I've seen it, and we've done it ourselves, but I've seen agents, and you're really good at this, so it would never happen to you, but they try to pull some tricks during attorney review, going out and getting the appraisal done real fast. And
oh, dude, that's the best.
Now, I know that doesn't happen in your world, but
did we talked about that on the phone?
Well, I just had one happen the other day where it was out in Highland Park actually, and we did a rush appraisal during attorney review because they were worried about the value.
What the agent said,
and it came in low. It was a property they put in on the market a year later. Didn't do a touch of work to it, and tried to sell it for $120,000 more. And my agent's like, hey, just we're going to order the appraisal quick during attorney review, but we made a cash with the option to finance offer on it. And I had the appraiser out there before the inspector came out.
So
and lo and behold, it came in low, and she's like, the listing agent's like, well, you guys did a cash with the option to finance, and the buyer's agent said, well, we're still in an AI right now. We're in attorney review, so we can cancel. And she was like, oh my gosh, I've been doing this for so long. How did that slip past me?
Oh no. So whenever I get a cash, so listen, it's a standing, like I got into not a fight, a friendly conversation 2 weeks ago. Someone tried that on me, and we're cash with option to finance. And I got a call the next day, and I said to the agent, I said to the appraiser, I'm like, oh, okay. He's like, he's like, listen, I got to get in there. It's a rush. And I was like, no one gets in to any of my properties until we're out of attorney review. I'm like, bro, I'm way too smart for that.
Yeah,
that is a trick. Listen, do I do it? Yeah.
Yes.
But that's why that's so funny, because that's why sleeping with the enemy is so important. And I've stressed this. If your buying agent or selling agent only works one angle, do not hire them.
Yeah.
Because if you're an agent on one side, you don't understand the angles that people take, because we've never experienced them.
And there's a lot of them you can take.
That's a big one.
There's a lot of angles you can take, and so
I can show you text messages to not to brokers, but to appraisers. I don't let anybody until AI's over. And people are like, it just happened to me at 2901 Sacramento. And I literally texted the guy, and then the mortgage broker called me up. We got to get the person in. I go, no one gets in until review is closed. Period.
So that goes back to you're competitive, but you're not cheap, right?
Yeah, because those are the things that people don't know.
No, and sellers sometimes just take the path of, I'm going to go with the cheapest agent, or whoever tells me what I want to hear.
Cheapest agent, cheapest lawyer, cheapest rate, cheapest this. It's like I know it's like so said so many times, but like no one walks into a doctor and says, I need eye surgery. Give me the cheapest doctor you have.
No.
I hope I know that like it's so played out. Like every person that like always says that when they're like talking to people, you don't say I want that. It's your largest investment. Spend an extra couple $1,000 and make sure you're protected.
I agree. I mean, it's mind-boggling, but it happens, and it's going to continue to happen. And as we see, rates drop and things of that nature, people are looking for the cheapest deal. And I tell my clients all the time, like, be careful what you wish for, because there's a lot of like things that can come up during this process, and there's so many third parties involved, and there's so many hands in the cookie jar that you just got to make sure that the people that are working for you are looking out for you, looking out for your best interest. And I know there's times,
and not everybody does that.
No, I mean I can't tell you how many clients, because I ask them a lot of questions around what's important to you during this process, and a lot of people just want to know the hard truth, even if it's not what they want to hear. So there's times where I've got clients that are fishing in a pond that's like way above their means, and I have to tell them, you need to come down about $100,000 on your purchase price. You're not in the right league right now.
But I think for every, there's no way to study this or know it, but I think for every client you lose from telling somebody you can't afford that place, for every client you lose, I think you pick up 3.
I agree.
Because I know when people refer me out, the first thing they say to, like, if someone's used me and they refer me out to somebody else, the first thing they say is like, when I meet with those buyers, my client, like, oh, my friend tells me you're going to shoot me straight, and that you don't mince words, that you're direct. And I'm like, yeah, I'm like, I may offend people when I tell you, like I had a text thread yesterday with a tenant. So I sold this guy's place. He's renting. Don't even get me into that. And he's paying like $5,000 a month. He listens to this podcast. You know who you are. He spends $5,000 a month on rent. And he just is like, I don't want to spend that. I don't want to spend that. He keeps looking for $3,500, right? Which is where his place is. But every place that's at $3,500 he doesn't like. And I just finally texted him. I said, listen, man, your budget doesn't match your eyes. I go, either go back to your parents' basement, I said, or readjust your thoughts.
Yeah.
That's it.
Yeah.
There's
I mean,
and call me when you're ready.
I want a Bentley, but I can't afford it.
Yeah, that's what I say. That's what I say to all the people. I'm like, I always say that to my clients. I go, I want this, I want this, I want this. Not the fucking true. It's just not what. We're not the U.S. government. We can't just print money.
Right. So, to kind of sum up what you're talking about, and the number one thing if your lender and your realtor are sitting down and doing a buyer consultation with you, or a seller's not sitting down and doing a real deep dive on a listing presentation with you, they're missing everything. The buyers especially, they're missing everything. There was a point in time where I had a guy that told me that, hey, it's a waste of time to meet. He works at a credit union. It's a waste of time to meet clients. And I did that for years of my career, and it was just, I felt like a commodity, and I hated the feeling.
Of meeting with clients?
No, I not meeting with clients.
Yeah, well, he works at a credit union.
I know.
Don't take any advice from him.
Well, we worked at the same company at the same time, at the time that we worked together. He works at a credit union now, but that's his model, and that's what he likes. For me, I like that long-term relationship with people where I'm, really helping them with a solution to customize what they're getting into. And it goes in not only with their finances and making sure they're in the right spot in their budget, because we do go to a deep dive on their budget, but also just how to go out there and do this the right way.
Now here, you're getting into a person that does their job and is not happy, and yourself who's happy. That's a whole different ball of wax. Yeah. I mean, that's like, I talk to agents that only do Zillow. These people are miserable. They may make a lot of money, but are they happy?
Yeah.
Right? They may be wealthy. They're not successful.
Yeah.
So that's just to me, that's just having some self-worth on what you do. If someone doesn't want to meet with somebody on anything that they're doing, they're not proud of what they're doing.
Yeah.
And they don't see.
That's a great way to put it.
That's it.
Yeah.
You're hiding. You're like, like when people say, what do you do? I'm like, I sell real estate, residential real estate. I'm not like, I don't think it's a bad thing.
Yeah.
And like, they're like, oh, how is it? And I'm like, I love it. I change people's lives. I do. Like right now I have 3 people that are separating, right? And those are my clients. They're separating. I look at that and when I talk to them, I'm like, in the back of my head, I'm like, you guys don't like each other anymore.
Yeah.
Or you do, and I'm looking to close the story.
Yeah.
And get you on to your next phase of life and get you to a happier place.
It's important.
Yeah. I mean, that's the difference between you and that person.
Yeah.
And that's just sales. It's like, do you actually care?
Well, especially when you're in that divorce situation where they're separated. I mean, it's tough. You have to know how to handle all aspects of that, because it's
on the mortgage end. On the mortgage end, I don't even know how you do it, because when I talk to clients that are divorced and they're still being alimony and payments, when they sit down and talk about, all right, I want to buy a place by this, on the back of my head, I'm like, oh man, that's a fucking mess.
I mean, I've been through that before, so I can relate. And so I think that's probably how I handle that the most. Like the best is that I can relate to what they're going through, and it is not fun.
No,
let me tell you.
No, and I will tell you, when you're sitting down with a consultation and there's 2 people that are you're at the table with 2 people that don't like each other, man, you leave that place and you're like, oh yeah, they don't like each other. and fight like I was like, I don't know, I was talking to my wife and I was like, yeah, I left this place. They're just, they're splitting. Man, people, like when you don't like something, you will fight about the color of grass.
Well, I mean, we're right in the middle of the money grab. It's money, like what it comes down to usually. So we're at that like tipping point where like, this is kind of one of the last steps of the process.
Yeah. And I just tell them, I just want to make this painless.
Yeah.
Like you guys got enough stuff going on. Let me burden everything. Just
But again, that goes back to you're competitive but not cheap. And so, when you know how to handle those situations, you know how to talk to your clients, you know how to have like a good deep conversation where it's going to like keep people. I think our jobs are really just to keep people calm.
Oh yeah.
Because there's like this market, there's nothing calm about it.
No.
Nothing calm about it. And so, keeping people's heads on straight. I mean, I could tell you, my wife and I, before we bought our house, we were under contract for a place over in North Center. And, and I share this story with my clients, but before we even had a chance, I didn't trust the construction on the place. So I hired a really higher end inspector, and it cost a little more than normal, but
once again,
yeah, right.
You want a $500 inspector or you want a $1,200 inspector?
No, I wanted a $1,200 inspector.
Well, it's a multi-million-dollar or over.
Totally.
I mean, you're going to squabble about $500?
Yeah. So the crazy part is before I even had a chance to turn my inspection results over to the other side and start negotiating, they canceled my contract during attorney review and went with a higher offer. Now, that's the kind of stuff that, can happen in this market right now. And, are they allowed to do that? I mean, technically no, but they can back out during attorney review too.
Yeah.
You're wasting time trying to sue them or go after them for anything.
You're wasting time waiting to the end, because once review's open, it's like, if it can't end during that time, it's over.
Yeah.
So they just speed up the process. Like, we know we're in 5 days, we're canceling. Let's just cancel now.
So when that happened, it's like my wife was crushed. Like, she was absolutely crushed about it. And, one of the things you just have to know, and this is where good advice comes into play, is that before you even get out there and start looking with Jason, for example, you cannot fall in love with a place until it's yours. Right?
Yeah.
That is like my number one rule of thumb. Like, do not fall in love with the place until you actually have the keys in your hands and we're closed, because there's so much that can happen. And, it is really important. My job's really important during the process, because, when there are contingencies in play, you don't want to give the sellers any reason whatsoever to back out.
Yeah.
And they will. They're fidgety right now. They're just as nervous as the buyers are, because sometimes they haven't even found a place yet.
Yeah.
Or they're banking on that sale to get their place, So there's just a lot of tension, I think, when you're going through that process, and, you got to make sure that no matter what.
But that's another thing that happens with someone like yourself,
Yeah.
that you're not going to get that. Like with someone, we'll just be like, you have to hit those dates.
Yes.
A big bank, a credit union, someone that's remote, they don't
care about the dates.
They don't even look at. I had one person told me that they don't even look at the file till it's like 5 days before the contingency's up.
Or they order the condo questionnaire like the week of closing.
What the fuck? But I will tell you, attorneys do that too. And I'm like, what the fuck?
Yeah.
Like when I start working with an attorney, I work with two people pretty much exclusively. I know this is crazy, but I set my standard.
Yeah.
And I said, listen, I'm going to work with you. These are the three things. Number one, a letter does not go out with me not CC'd on it, ever. I don't care if it's whatever it is. I need to see everything, because I know the most about the deal.
Yeah.
Period. Right? We got to hit the dates. We can't wait to the end. Like, there's certain things and you can never, there's attorneys that will act. I mean, getting off, and I'll come back right in. There's attorneys that will do stuff without even telling their clients.
Yeah.
I'm like, hey man, when I give, let's say we go to contract, I'll CC you, I'll CC the attorney, I'll CC everybody. I will write on there were 10 offers. This is why we got the place. Let's keep that in mind so we don't lose the place.
Yeah.
These are all the things, because if everyone doesn't know the urgency that's involved, and people don't understand what's going on, and I don't expect everyone to know what the hell we just went through.
Yeah. Yeah. It's communication 101.
It's huge.
And there's such a lack of communication in our industry.
Well, when you pay for, but that's the payment part.
Yeah.
Right. You're not paying. I always tell people, you're not paying for the rate. You're paying for the service.
Yeah, it even goes you're right, and
you are.
You're paying for
you're paying for an 8 o'clock call on Sunday.
Totally, and so one of the things that just drives me nuts, and I'm sure it does you too, is just not only the lack of communication, but just the lack of like you just said. You have a contract. You have all these notes on here so that everybody knows what to expect and why we won the deal and what cannot happen to kill the deal. It's the same in my world. It's like, we get condo questionnaires back too all the time. And it's like, are we reading them before we submit them, or are we just pushing papers? And a lot of lenders out there right now are just pushing papers. I can't tell you, just this week alone, I've gotten 3 condo buildings off the Fannie do not lend list because other lenders shot something over to them that was incorrect, right? So we can see the notes on Fannie's site on why it's ineligible for financing, and it was a question that was answered wrong. It's like, guys, are you a problem solver or you're a paper pusher, right? And so, it's the same with the contracts. Like quote. keeping that deal together is paramount. We got to, I think who you choose to work with on your process is a make or break. It can be a make or break on your whole entire experience. And
if I see, and people may just say that I'm saying this, but like when you see attorneys, when you see lenders, when you're working with that matters. In this environment, everything matters. Everything matters.
Yep.
And people don't get that. Like everything matters.
I've had your sister accept a few of my deals that are offers from our buyers, and she's on the other side, and they were really hard deals, and she knew they were hard, but I think she accepted it because she knew she had a good team that was going to figure it out.
Yeah,
right?
it just matters. There's a level of professionalism, and I think. I think in any business, people have that thought that stuff matters.
Yeah. What is your, besides the cash with the option of finance, what other good tactics are you using for your buyers right now to kind of separate yourself from other offers out there?
I will tell you that I always tell this to people, when there's 5-day attorney review, I literally, this may sound contradictory, but I will explain why. I take it to 7. And the agent will be like, well, we have 5. And I said, listen, I can't perform everything I need to perform in 5 days. And I don't want to ask for an extension. So I'm just coming to you in a way that's honest. I said, I can do a 2-day attorney review period. And I go and I will ask for an extension in a day and a half. I go, I said, we all been here. Why don't we do it the right way so all the dates are met and we have no issues? And I'm just super upfront with everything, beyond upfront. And that's my reputation. So your reputation precedes you. My father always said that to me, right? So as soon as you establish that reputation, you just have to maintain it. And sometimes maintaining that relationship, the reputation leads you to firing clients.
Yeah.
And I have no problem if a client is if I spend 20 some years having reputation, I'm not going to let one client ruin that reputation, not because of me. People that don't understand sales is oh, he's firing that person because it's too much work, or he's firing this person because it's this, or they don't get along. No, I'm firing that person because I got 400 other clients in the next 10 years that are going to be affected by that one person.
Yeah.
And I'm not going to let them lose places because of you. And I actually, when I fire people, I tell them that. I said, the reason I'm letting you go has nothing to do with the fact that we've looked at 200 properties or this or that, or that me and you disagree on things. You're not upfront with me, which means I can't be upfront with the seller or the buyer or this or that. So if your basis is lying to me, which you're lying to me only hurts you, because if I don't know the truth, I can't perform for you.
Right.
But you lying to me means I'm lying to them, unbeknownst to me, right? So then my word to them cannot hold a candle. And then on top of that, when I go to submit offers in a month and it's the same agent or this or that, that person's at a disadvantage.
Yeah.
And if you don't think if you're with an agent that does not have a good reputation, or you hear rumors of a bad reputation, but you like the person, I'm just letting you know you're entering that market at a disadvantage.
Yeah.
I can name 4 or 5 people right now, which I won't do.
Yeah.
Where the offers are on the table. Those the same thing. If I see your name, all things remain constant. I see your name and I see Quicken, or I see Chase, or I see Bank of America. I'm gonna sit the offers down. I know him. He's gonna close. I never get anywhere with Chase. Bank of America is going to give you you're not going to hit your, I can tell you, you're not going to hit your
critical dates in there.
Dates, and also Bank of America is terrible with appraisals. Chase, you don't have a parking spot. Chase is not going to want to do the loan because it's not a homogeneous product.
Yeah.
I'm like, these are all the things, at 22 years, these are all the things that go wrong that I've seen go wrong. This is the one that's going to close.
Yeah. No, it's called the non-negotiables, right? I mean, you gotta, going back to what you said with your process and firing clients, I mean, you gotta have those non-negotiables in place, or you can't
establish a business.
Yeah. I mean, you got to know what that, like, for me, I know what that perfect client looks like. They want to go through my process. They want to do everything that, we ask them up front. They're kind, they're courteous. They're not like pushing back on everything. I mean, there's such thing as defining what your perfect client looks like.
And perfect clients usually hang out with other perfect clients.
Yes.
And shitty clients usually hang out with other shitty clients.
Yeah.
Like when you have a crappy client, you're done with it. You're like, as soon as a referral comes to them, and like, you hang out with this person. Yeah, I'm just so busy.
But that's why you can do what you can do, and I can do what I can do in our business. Is that we've got that defined, and it's okay to like pass on a client because they just don't conform to that box perfectly. I mean, I'll bend the rules a little bit if they're just a little out of line, but at the end of the day, like, I know what my client looks like, and I know other loan officers that are constantly doing credit repair and this and that, but that's what you attract if that's who your client is, and that's okay. Like,
yeah,
it's okay to do credit repairs on people and do things of that nature. It's just not who my perfect client looks like, because it's just a lot of work. I mean, I'll give people advice on credit, but I don't have time to like, I like clients that have good credit, not that I'm,
No, I hear you. No, it's fine.
I'm not judgmental, but and if they don't have great credit, at least are willing to take advice on how to get it up, and then
show me that you're willing to do that.
Show me that you're willing to do it, and then I'll give you my time. Yeah, exactly.
There's no reason to give your time if that time's not reciprocated.
Exactly.
What's the point? I mean, I say the same thing to my kids. So I mean,
right.
Why would I give you my time? I tell my kids all the time, why would I give you my time? Why am I going to sit outside and rebound you for an hour when I leave? You don't do any work on your own.
That sounds like my conversation with my 4-year-old this morning at camp.
Yeah.
He had a meltdown to bring him home this morning. So
don't just leave him there.
It's a new camp, so he's on day 2, and he doesn't know anybody there. So it was
is that
4? My 4-year-old. So he's a little young.
That's by 6 or 7. It's like,
he ought to have left him there for sure by 6 or 7, but he's still a little guy. But no, I know another tactic that I love that you use, if we can touch on just but just putting that timeline out there, like, that's another one that you and I have talked about in the past, where, helping to win multiple offers, where you put a timeline, like, this is a great offer we're giving you. We need to hear back by this time.
Oh yeah.
Tell me how that's performed for you this year, because I love that story.
So I had my first time that it didn't work, but it's like the 90% effective, and basically saying, hey, this is our time. This is, I know you're going to get offers. You want to do Saturdays and Sundays. Here's our offer on Friday night. It's an amazing offer. It's everything you want. And the thought process is, once again, this is talking to your client, and then also saying to your client, if it doesn't work, you're not getting the place. Are you okay? And I will say that like 3 or 4 times. No, we're okay. I'm like, I know, I just want to ask again, because a lot of people say they're okay and are not.
Yeah.
Like, this is our best. You're either going to take it or you're not. Because if they're not going to take your best on Friday, they're not going to take your best on Sunday.
Yeah.
There's no difference. So why not just wedge in? Now, I will tell you what happened to Sophia is she got an offer, and it was the same style as mine, where I just say, this is it. However, it was price-based in terms of, today on Friday, this offer is this dollar amount. On Sunday, it's this dollar amount. So we're staying in the game, but our dollar amount is changing.
Yeah. So it's going down by Sunday.
It's going down.
Okay.
And her clients took it.
Wow.
And you know what they said? They said, well, that's all our furniture for our new house. Let's just take that offer. And I will tell you another thing, and you can relay this to your clients. When a person I got yelled at it. I talked about this I did a podcast on my own and just went over like just rants. when someone,
I listened to that one.
yeah, like when someone goes into a place and you like it, and you see 20 people that are there, and you want to put an offer in, and you leave the house at 1, why don't I hear from your agent? And I hear from your agent the next day, and then you're upset that the place is gone.
Yeah.
What are you waiting for? And then you're like, oh, you didn't wait for us? Like, you never called me. You never told me you liked it. You may have said during, oh, we really like this. We're going to put an offer in. Okay, where's the offer?
So when you're on this is out of curiosity, because this is how we won our house. When you're on, because that story that I told you earlier where we got our offer declined, we went out the following Thursday, and we had a private showing set for a Saturday morning, and we came in, we had the offer written up before we even went into the private showing. And we walked out the front door and hit submit right when we walked out. And
yeah.
It was full price offer, quick close, everything that they were looking for right on that offer. They had an open house on Sunday. I was like, there's no way they're gonna accept this. They accepted our offer on the counter offers on Sunday during the open house. We accepted their counter, and on Monday they had like 9 offers that came through. So like, how often do you see when you're on the listing side, if someone comes in, they're you like the family, you like the agent on the other side, they come in and you just make a really strong offer up front. How much weight does that carry before you get into like
huge? So I had this
house
conversation with a seller at 2343 Montrose last week. We got an amazing offer. They left, did the same thing, no mortgage contingency, but cash with mortgage, as is with inspection. It was a great offer, and they did it on the first day, and we had an open house the next day, and they had a timestamp, for that night.
Yeah.
And my client's like, "What do you think?" And I was over asking, and I said, the mathematician would say this to me. This is what I said to my clients. I said, these are fictitious numbers, but we'll just go with it. We're listed at 750. We get an offer for 800. It's clean. It's only good for one day. I said, what are the odds of you getting an 810 or 815 offer on a 750 with no contingencies, as is, close whenever you want to close, versus a 760 or 740 on Monday? I said, the risk reward is not there.
It's nominal, if anything, right?
Maybe you lose 10 grand, but here's the problem. The house is not worth 800. Mm-hmm. There's no mortgage contingency. They're putting 30% down,
which means appraisal's gone too.
Well, appraisal's gone too.
Yep.
And they can make up the difference if this or this. Because what I do is I said, send me your cash accounts. I want to see how much cash you have. And I tell the agent, I said, you want this place? You have to give me what I want, because I'm going to make my people feel fuzzy.
Yeah.
And then they show me a cash account with they show me like $2 million in stocks. $2 million in stocks, 30% down, $50,000 over asking. And they wrote it the hour that they left.
Yeah.
I'm like, that is somebody who's in it for the long haul and wants it.
They ain't backing out.
They ain't backing out, man. Yeah. They're not. I give you like. There's always something could happen. Like somebody could get fired. Someone could pass.
Yeah.
Like there's something that could happen. I said, but the downside is so far greater than the upside here, because everything is perfect. So even if somebody gives you $850 and they have a mortgage, it ain't closing.
Right.
Somebody can write you an offer of fucking $2 million on a $200,000 piece of land.
Yeah.
That doesn't really matter.
Right.
It's only worth when it closes.
Yeah, exactly.
It's all garbage till that happens. I go, so what are you willing to make that mistake? I said, tomorrow it's going to be 100 degrees out.
Yeah.
Possibly rain. I'm like, it's up to you. I said, but we get to Monday, Tuesday in this market, and we had 45 people through. Now, mind you, we had 2 offers, but I had 40 parties that came through. So 2 offers on 40 parties, not 20, not 15. And we were pushing the price to begin with.
Yeah.
And I was like, and then they were like, yeah, let's do it. Now, I said to the people, we're going to sign the offer. I said, but I'm still doing the open house on Sunday.
Yeah.
I said, because, I don't know. I don't have to mark it contingent. I told them, I'm marking it contingent on Monday.
Yeah.
If you're okay, like it's signed, you have the first right of refusal. I said, but these are the backups we're taking just in case. I did the open house on Sunday. They came to the open house. It was packed. They left. The agent calls me and she goes, we're literally, she goes, we're changing the offer to no inspection whatsoever. We're not even coming. So they got so panicked that, that they did that. And like, listen, I'm sorry. I'm going to keep you on your heels. That's my job. Like, I'm going to keep, at all points, if you're a buyer and you're buying one of my things, you're never going to be comfortable. That's my job.
Yeah. I mean, but that's what a good agent does.
That's my job. Like, everyone else would cancel the open house and say, I'm going to hang out.
Yeah.
I'm like, no, man, I got the 2 hours. It's already blocked off anyways. I'm like, let's keep their feet to the fire.
Yeah. Get the pressure on.
Yeah, keep the pressure on.
The pressure's on. Wow.
Pressure's on.
That's a great story.
Yeah, and that's like, I always make sure that you constantly are still doing your showings. Just, hey, listen, that's my duty to my client. I'm not going to be lazy. I want to make sure that there's still urgency pressured on that buyer.
By the way, that's my number 2 rule of thumb when you're going through this process. If a property checks 70 to 80% of the boxes, don't think about it. Just make the offer, do it quick. Sometimes that first offer is what sellers are looking for. They're looking for that like good, strong offer that comes in. I can't tell you how many times I've been in a situation where they do let it ride through the open house, but they always come back to the people that made the first offer.
Oh yeah.
And they're always like, hey, we let this thing ride. We're in multiples right now, but we wanted to give you guys the chance because we really liked you and you were the first offer. And in all fairness, you came in really strong.
Yeah.
Right. So,
I don't understand people wait to offer. There's no, listen, it's going to be multiple offers. Who are you fooling?
Who's advising you to do that?
Yeah. The one person from a couple weeks ago that never had a chance to offer was on a multi-unit Cleveland. He called me directly. And I'm like, first off, I can't speak to you. He's like, we said this, and this, and this. I'm like, hey man, you want to call me in a conference call with your agent? I'm totally fine. So she calls me back and I literally said to her, I go, why'd you wait? Why did you wait? There's 20 people there. People are talking about writing offers. Why would you wait? Somebody came in, gave us $100,000 over, no inspection, full cash, gave me a cash statement. It's going to close in 3 weeks. Why would I wait for you?
Yeah, it's a head scratcher.
He's like, well, we're going to be cash too. And I'm like, I don't know that. You didn't offer.
Again,
but that's being prepared. That's talking,
what I was going to say.
That's talking to
prepared.
You. That's talking to you. That's talking to me and having listen, you have to have a plan.
It's crazy because when I don't meet with a client, which is very rare, but I get that call on the weekends, like you said earlier, like, why haven't you talked to, where's your pre-approval in your hands? Oh, now you got to call Mike on Saturdays and Sundays. Those deals never work. Like
because they're not ready.
They're not ready. They're not prepared. They're not even ready to make the right offer that you want them to make because they don't have confidence in their abilities to perform at a high level with their finances. Some of them do, but I can tell you that, the people that I actually sit down and meet with, I think we're batting like 600 this year on winning multiple offers, which I think is pretty darn good.
Well, you have a plan.
We have a plan in place. We know exactly what it looks like. We know exactly where we're going with it. And look, things pop up. I mean, you're seeing it right now. There's more inventory that's popping on. That whole like unlocked buyer that's going to come out of the woodworks when rates get down in low 6s here soon, you think that's going to create more inventory, but it's not.
No,
it's not. It's a 1-to-1 trade-off. You're going to see. I think it's
5-to-1 the wrong way.
Yeah, totally. And I think what is the number? It's like, I think if you get down to 6.25, there's like 5.5 million homeowners that could be potentially unlocked that have a 5.25 or higher.
Yeah, we only build like 800,000 homes.
Yeah.
So like, and people are like, oh, this. I'm like, man, you're gonna have I was talking to a buyer and they're like, what do you think about rates? And I go, man, for your sake, they nearly shit their pants. I go, for your sake, I hope they go up 2 points. And they're like, what do you mean? I'm like, dude, you need people out of the market.
Yeah.
You get rates go up 2 points, you're going to be able to like pick off what you want, get discounts.
We're seeing it right now. I mean, and again, I don't know what that window looks like, but I think I was on my way over here. I was listening because CPI came out this morning and there's a 57% chance that there's 3 rate cuts by the end of the year this year.
Yeah, I read that too.
So it's like, it's heating up. And so, my advice to buyers out there right now is that if you're waiting for rates to come down,
It's the worst
It's
advice.
the worst thing you could
It's
possibly do.
It's people don't. I don't know if it's like people that just didn't pass math or.
I don't think people really truly realize it. Maybe they'll hear it on your podcast today, but it is not nearly as expensive to just the closing cost for refinancing than it is to purchase. It's a fraction of the cost. I mean, in some cases, we're doing no closing cost refinances, but a typical refinance is going to cost you about $2,500.
Well, it's probably cheaper than the $30,000 or $50,000 you're going to have to pay for a house when rates are in their fives.
Exactly,
So
exactly that too. But that's the trade-off, right? And I've worked out so many different models for people where they're like, we want to wait till rates get down to 5.5%, and then I show them like what the value goes up to. While they're waiting for that to happen and what they're purchasing at now. And the funny part is that even if rates get down to 5.5%, the price that they're going to pay on the new values that are continuously going up is higher than the rate of their payment at the 5.5% they would have gotten today on a refinance. So
I don't think people sit back and like really think of things like in a logical standpoint, like, hey, this. But once again, I think that is the person that comes and meets with you beforehand and says, hey, this is our thought process. What should we do? This, and this. And it's like, hey man, it's the person that I'll talk to and say, and like, hey man, you know what? There's nothing wrong with it. This buying's not for you. You're a lifetime renter,
by the way,
which is fine.
I'm really glad you talked about this today, because this is like, it doesn't get talked about enough. And, I think people just, watch the news and hear about the markets but they don't hear about the preparation that goes into doing this the right way and winning at a high level. And I'm really glad you brought this up today.
So think about it. It's the most money that most people will ever spend in their lives.
Yeah.
The most. If you don't prep for it, and I think
and also the most money they'll ever make in their lives.
Yeah.
I mean, I can tell you that, just my mom alone, we just sat down and went down the path of memory lane the other day about her owning a home since I was like 6 years old. And today, she's in her mid-70s, and her real estate makes up like 70% of her overall wealth.
Yeah, there's a study on that too. The boomers are killing it.
The boomers are killing it right now. So like, it's not only the biggest purchases they're going to make, but it's also one of the biggest investments that's going to get them the best return over time. And
man, if you make a mistake on that thing too, it's like night and day.
Big time.
Yeah. It's just.
And you can make mistakes in this environment right now. You can way overpay for a property if, there's a certain thing out there called overpaying big time, where you're never going to see your investment back out of it.
You can overpay. You can buy the wrong inventory in a certain area that inventory, just through the demographics are going, doesn't make sense. I mean, listen, buying a home in Lincoln Square and buying a home in Ukrainian Village 10 years ago, right? Lincoln Square now, I mean, it's insane. It's like $2.5 million.
Yeah.
Ukrainian Village, maybe you're 1.1 to 1.5. So like finding.
Well, I'm in Irving, and that's all blowing up over there right now.
Yeah, I mean, you're going to see 200% to 300% increases.
Yeah, it's crazy.
Because you have Lincoln Square, you have Avondale, and Irving gives you great highway access, Blue Line, Metro stops everywhere. Yeah. You have high streets, you've got Milwaukee, you've got the renovation, and Portage Park is exploding. That whole area is doing really well.
And there's nowhere else to, it feels like that.
You can't get dirt. So Irving, you can still get dirt.
Yeah, you can still, there's a lot of bungalows they're building on right now. And on my street, there's like 4 new houses going up. So it's just, but again, like I'm really glad you talked about this today, because I just think it's not talked about enough. And, listeners out there, if your lender, especially, realtors are always mostly going to sit down and meet with you. But if the lender's not sitting down and doing a deep dive with you and going through your finances, running a budget on you, talking to you about tactics and strategies, it's just a big miss. And I'm not saying that just because that's my model. I'm saying it because I see it and you see it all the time.
Well, if you can't cut a check for the house, how your finances are and how you are with your mortgage broker and how prepped you are for that is everything. Listen, man, like I said, you can write an offer for $2 million. If you can't get the financing, it's not an offer.
Yeah.
I had 2 fall throughs. One fall through was, I have a property in Uptown, and it fell through with another agent. It fell through with me. And my client's like, we had to lower the price. She's like, oh, I got this and I got this. I'm like, well, you never did. Like, just because if it doesn't close, you didn't get it.
Right. Right.
Like someone, like, I know that's terrible to say. And I'm like, I was telling her, cause she's older. I'm like, I'm not trying to be mean. I'm like, if someone writes you to offer for 1.2, it doesn't mean the property is worth 1.2. It's not getting there because it's not worth that. This is what it's worth.
Yeah. That's wow. Did you, I know you wanted to, I mean, I don't know if you want to talk about investment properties or not, but
Dude, we're like, well, let's do another one.
Let's do another one.
Yeah, we're hitting an hour as it is.
Okay, good. That was an
But
hour? Wow, that was...
I do want to do that because we'll do another one because I have a ton of investment clients, but I had somebody come in and use that acronym, the ASR, what AD?
DSCR?
Yeah.
Yeah.
And she spent like 5 minutes telling me about it. And I was like, what? She goes, yeah, there's a whole no doc. There's like for investment, like it's a whole thing.
Yeah.
So
yeah, we'll say that for later.
Let's say that for later.
But I appreciate you having me.
Yeah. And I think,
can I give a shameless plug to my podcast?
Yes, please do.
If you want to follow me, I'm on YouTube, Instagram, Facebook, social media on More Than a Mortgage. We talk about building wealth and wealth strategies around real estate, and we also talk about things other than that. Like we talked about insurance last week.
What's your for your regular? So for your regular Instagram
at J Michael Black.
Okay, and your phone number?
773-426-6798.
Email?
Michael@jmichaelblackgroup.com.
All right.
I appreciate you having me on today.
Hold up. What's the other thing that my kids always use? Oh, it was developed in Stanford where they talk to each other. Snap. Do you have a Snap?
Do I have a Snap? I don't do Snap. I'm like,
I know you don't.
There's way too many things out there to follow. I think I've got enough. So
that's all my kids just use Snap.
Really?
It's like, oh my God.
I heard a realtor this morning talking about she uses WhatsApp, like for a lot of like marketing. I've never heard of that before, but it was on a podcast I listened to this morning. WhatsApp. I know. I just use that one. Why do I international? Know that? It's like an international texting app. So.
That's you can't trace anything.
Oh. Okay.
I'm gonna tell you right now. If someone says to you, "Hey, do you have this? Can we talk on this?"
Yeah.
It's a scam.
Okay. Yeah.
That's because it's completely crypted. So like when they're trying to scam people, you can't figure out where it's coming from. So when people say to me, "I want to do what's," I'm like, I only do conversations on a regular phone or email.
Yeah.
Like when my bosses like talk about that, I'm like, well, I'm sorry, find another agent. That's just a total scam.
Yeah.
It's crypted. It's
well, I know there's like Signal and things like that.
Someone just bought that too. I think Facebook may own that.
Really?
I think Meta may own it.
I think you're right. You're exact. Yeah. She said that too on there.
Meta owns it. It's just, honestly, it's for criminal activity.
Yeah.
That's just let you know.
Or international calls.
It's criminal activity.
So
yeah, that's my warning. If someone asks to do business on that, they're angling. At some point, you're going to get like, "Have you ever thought about getting into crypto?" And I'm like, "Yeah, bye." Then I just took the app off because everything was criminal. All right. Well, thank you so much. Yeah, we'll get. We're going to have part 2. We're going to talk about that because I was like, I've never heard of this. I should know it. So I want to get into that, especially since I have a ton of investor clients.
Well, there's some good, unique, like non-QM stuff out there that I think people need to hear about. So we'll do another.
Yeah, we'll do another one. All right. Thank you so much. Subscribe to the Jason Theory. This will be our end of August. If you have any questions with Mike, you can reach out to him or you can reach out to me and I'll DM him and get you guys together. Thanks again for your time. Jason. And be good. Bye-bye.